Good afternoon, everyone. Jason here. Today is December 8th, and this is your ES and CL trade plan review. So the first thing we're going to talk about here is the ES. The ES was pretty choppy and sluggish today. We are in the middle of the contract rollover. The volume was slightly less on the March 17th contract than it was on the December contract. So, again, maybe rolled a day premature here. Even though our expectation level was that the volume was going to have rolled over, again, it was a little bit less on the March contract than it was on the December contract. So that really gave us cause to want to be patient, and price action really gave you a cause to want to be patient today as well. So again, what you're looking at here is our session bias was bullish here today. You can really see this on this session bias chart. You had a low, a higher low, another higher low, and then, of course, the big rally yesterday as the market closed at these highs. Market did slide down a little bit here, tested this support, and then rallied fairly aggressively up. So, really, we only had two opportunities today on your trade plan. There were only two opportunities. The one that we were looking at here today, and let me do this just so it's not as confusing here. We were looking for a potential short opportunity at 22.40.75 up to 22.45 quarter. That's where we were looking for that opportunity. We talked about the market being in a potentially choppy to sideways conditions with a bullish lean, which means that once you get to the top of a zone, that would be a good place to look to short it out. And that's kind of what the trade plan called for here today. Now, if you take a look here at the market, it really was a fairly narrow range most of the morning. In fact, if you look here from about the open till this is about 11:30 when you made this breakout here. So for 3 hours, you're really in a back and forth 7-point range, really fairly narrow range. This band up here that you see represents this 22.40.75 to 22.45 quarter. That's what this band represents here, and the top of the box is 22.45 quarter. So you did a lot of rotation around this band, but again, we were in these choppy to sideways conditions, and so our expectation level is that the market would sell off here. Now, you're at the top of you're in a bullish type of idea. So from here, this sweet spot up to the top of the band would be your shorting zone. If you were looking to get short here, and you had really 22.45 quarter, made it up to 22.46, which is only 3 ticks out of the band. And then it sold off for a move down to 22.36.45. So 46 quarter down to 36.75 is just almost 9 ES points. And that really was the only opportunity today on your ES. So we talked about that in your trade plan. We only gave you 2 opportunities where we like to normally give you 3 or 4 chances. We only gave you 2 opportunities today because of the nature of the contract roll and the big rally yesterday and some of those ideas. Now, here's what's cool about the trade plan. Even though you may not have been there to take this opportunity, what it also does is it keeps you out of the choppiness, right? So there is nothing in between this zone here to do. There's no support resistance levels. There's really nothing in the middle of this zone that would get you interested, at least according to the trade plan, right? So there's nothing here that would keep you interested in doing something. So not only is the trade plan good for helping you identify possible opportunities, it's also good for keeping you out of choppy no man's land trading conditions. And that's also that is in some cases, if you start talking about protecting capital and protecting living to fight another day, those kinds of ideas, that really helps you in that regard. So let's take a look here at the CL. The CL was a little bit better mover today, even though it was in a fairly narrow range relative to its 10-day average. We were 137 ticks total on the day, and a lot of that happened right at the very end of the day, rather, and against the 217 10-day average. So again, pretty narrow trading conditions today. We're going to talk about the trade plan setups here. So what we talked about in the trade plan when we put it out around 9 p.m. Central Time last evening, $50 to 50.10. There was a breakout zone there. That's what this B1 tactic means. There was a breakout zone there. Market needs to break down below 49.75 or lower, and then rally for a breakout above 50.10. So if you look down here, the market comes down to 49.61. So that is the breakdown below the 49.75 that we were talking about. And then the market breaks out here at 10, does a little bit of a rotation, and then goes up about 40 ticks there in the overnight session. So that was the first area where the trade plan called for an opportunity. Then the market kind of rotates around until we get to the open. And then after the open, we'd already broken out and already done this first part of this leg. And so what we were looking for is we had a market maker level right here at our daily structure signal right here at 37. So we were looking for a breakout above this 37 level so that we could participate in this part of this move that started on the breakout above 50.10. So as the market comes up into this daily structure signal, we find lots of resistance right up here around 71, and then the market sells off for a big move down here. Now, this was due right here in large part to some statements that came out from Russia about the OPEC meeting, and there's still some doubt on whether or not and I say OPEC meeting, there's going to be a non-OPEC and OPEC country meeting in Vienna on Saturday, December 10th, and it's during that meeting that they're going to talk about the specifics of the output cuts and who's going to be, what quotas are going to be applied to which countries, et cetera. And that's one of the things discussion. So there's still some doubt about whether or not that's going to, how that's all going to work out. So there's still some doubt there. And you had a little bit of an announcement that spooked the market here. And you can expect this to happen quite a bit as we move into the next week as well, that there's going to be some knee-jerk reactions as news comes out of that Saturday meeting. But anyway, this gave you another opportunity for a short that was called on your trade plan. If you take a look at your trade plan here, we said that 49.90 was a breakout area. We said the market needs to rally up and over 50.10, which it did, right? It came all the way up to 50.71 and then or higher, and then sell off for a short somewhere below 50 to 49.90. We said the sweet spot was 49.90, although you could have gone in a little bit sooner. There's the breakout right there at 49.90 on the news. Now, it didn't go very far, but it went far enough for you to be able to protect. It went down to 78, and then the market began to rally back up again. So one of the things that was a little disappointing about today is this big news event. Had we not had this big news event, we were long at 38, 50, 38. And if you were in the trading room today, you remember this, right? We were looking to hold on for our red break area up here at 98. So that was the area that we were looking to hold on to. And we got long here off of this area at 50.38, and we were looking to hold on to 98. The market sells off on just a quick news event. This lasted about, about 15 minutes, 10, 15 minutes total. And then we continued this rally back up to where we ended the day right in our zone here. In fact, when the market closed here today, we had quad topped right there at 98. So again, trade plan giving you multiple opportunities to take advantage. Your swing indicators were also giving you opportunities to let you know that it was time to get in. So one of the things that we looked at here today, we'll analyze one of these trades that we took. We were getting long right here off of this 38 level. The market rallies up on big volume, comes back down on lesser volume and fewer ticks, giving you that chance to look to get in. And that's what we did. We looked to get in right here around this 38 level. And then the market continues to rally. In fact, you got all the way up to 75 here. We got 40 ticks off of this. It went 40 ticks in our direction before you had this real big sell-off here. And again, that was the news. Had we not gotten to this news event, we'd have gone right up into our 50.98 and made a 60-tick pop on it today. But it was in this swing right here area. You had a small pullback on 8,000 contracts. Then you had 23,000 contracts and a 50-tick move up. A small pullback, 15,000 contracts. So you had almost the same number of contracts. Here's a really good idea. You had almost the same number of contracts on this swing down as you did on this swing up, except you went 50 ticks on the way up and 34 ticks on the way down, and you didn't quite have the same number of contracts on the way down. That was a good idea to let you know that it was time to get in there. And if you take a look back here at your volume bars, again, the volume bars, this is that big swing spike right here. This is that big swing spike down, and then almost an immediate rally back up once it was realized that information was not going to be that critical. And so one of the things here we were looking at in the room is, and we put a trail stop underneath here in our initial entry into it here. So if you take a look here, These volume bars, they get bigger and fatter as more volume gets into them. And so as the market's rotating around, you finally have this inertia that gets you up through. And you had a big volume bar here at 26, another big volume bar here at 36, right? And this is where we were looking. You had a pullback into this 25, 26 area. And this is what you look at here. You look for this. You can use this for stops and entry techniques and things of that nature. Draw this rectangle here. Look at where the buyers took over right here, right? This is where your buyers took over. And so as you got this buying pressure, you had some sellers step back in here, and you lifted right out of this zone all the way up to 75. And look what it took to actually break down through where the buyers had taken over originally. It took over quite a bit. So this was that 36 to 38 area that we were looking at. This is one of the reasons why we were looking to get long, is we knew that there was support in this zone. We knew once you got this confirmation and this bar held, that the market was going to be looking to continue to rally, and it did all the way up to 74, 75. So we were getting long right in this area here off of your daily structure signal and with your volume confirmation. So again, trade plan really worked to the letter today, gave you a couple of nice opportunities, and ended up ultimately taking out the target that we had identified way early in the session. It just took a long time to get there. So again, as always, I want to say thank you for spending some time watching the videos here at the Oil Trading Group, the trade plan review videos. And until next time, I want to wish you good luck and good trading.